a quick revision I can say on the part of section 51 of the CGST Act, TDS, tax deducted source, applicable only when the taxable value of a contract which exceeds 2,50,000, which does not include taxes. Without taxes, the value of supply of a contract is more than 2.5 lakhs. For example, if a registered person supplied goods to state government of Tamil Nadu, DDO, there are 4 separate assignments, 4 separate contracts. Each contract 2.5 lakhs, 2.5 lakhs, 2.5 lakhs and 2.5 lakhs. Totally 10 lakhs. Value of goods supplied to DDO. DDO required TDS? No. Reason, per contract the value should be more than 2.5 lakhs. Then only DDO will get the TDS. Is clarification of CBSE. Are you getting my point, sir? Further, if the value exceeds 2.5 lakhs, but the supply is exempted from the payment of the GST, no TDS. Further, RCM applies, no TDS. Further, if supply to a DDO where the recipient being a DDO neither belongs to location of supply state nor belongs to the place where the place of supply happens. In that case, the DDO not liable to pay TDS. Is clear, my dear sir? Further, TDS is applicable only when the value of per contract taxable supply exceeds 2.5 lakhs and the DDO who receives a particular supply of goods or services or both should be belongs to location of supply state. If not, at least belongs to the place of supply state. If so, due to the TDS, intrastate supply, CGST 1% and the value, SGST 1%, interstate supply 2% IGST, 2% of TDS and the entire value which you are going to make the payment to supplier is a TDS applicability. However, TDS also be not applicable in the case where if the supplier itself is the uninsured person and DDO receive the goods or services, when you make the payment to uninsured person, TDS not applicable. Further, TDS also not applicable if the supplier is a central government, state government or a local authority or a particular establishment established by passing an act or a particular what we can call the body corporate in which not less than 51% of the share capital held by the government or a public sector lending company provide these services to central government, state government or UT or the local authority, one local authority to another local authority or to a PSU. Like that, if you provide these services, DDO, in that case, TDS not applicable. But here, Society Registered and Association Act, if they provide the services or goods to somebody else, to DDO, in that case, TDS applicable. If the value is rupees 2.5 lakhs. Got the clarity, my dear sir? It is as simple as this. Even TDS is also be applicable if the supplier is a composed levy scheme assessee and issue the goods or services by issue of a bill of supply. In that case, the recipient DDO, the value exceeds 2.5 lakhs per contract, liable to the TDS. And the TDS amount what you are going to pay by GSTR 7 written by deductor, that will be auto populated in the account of deductee in their electronic cash ledger. Is clear as simple as this. The TDS. I have been covered almost all the points in the given case. And here, if you say further, who is a DDO? Who is a DDO? Means a department of central state or UT or local authority, governmental agencies which includes furthermore an authority established by passing an act by Parliament or further an entity in which not less than 51% of stakeholding held by the government or a society registered in the Association Act or otherwise a particular public sector undertaking company, we call DDOs. They are liable for TDS. If they have not registered, then they must compulsory register in GST law to pay the TDS, for which threshold limit of turnover not applicable. It is a compulsory registration for the DDOs to pay the TDS to department. Under section 24, registration is made mandatory. Got the clarity, my dear sir? As simple as that. We have been covered almost all the points here, and if you say that I have been covered this by saying that what is the period to make the payment of TDS by deductor means every month has to pay by 10th of the following month, and GST 7 should be filed. And TDS certificate should be issued by deductor to deductee GST 7A. Now there is an amendment in the Finance Act 2020 amendment with effect from 1st January 2021. So here what they said here is, anyhow when the GST 7 filed by the deductor, it auto-populated in the GST PMT 05 electronic cash ledger of the deductee. Then again why should issue the certificate of TDS deduction in the form GST or 7A. So GST 7A not required to issue. Thereby non-issuance of GST or 7A, there is no penalty today. Is clear? If GST 7 not filed in time, penalty is there. The penalty here as follows: less rupees 5,000 or rupees 100 per day of delay, whichever is less is the penalty to be paid. If fails to pay GST 7 within the due date, late fee is applied, penalty rupees 100 per day of delay or rupees 5,000 whichever is less as per the CGST Act. Same amount as per the SGST Act. Effectively speaks rupees 200 per day of delay or rupees 10,000 whichever is less, effectively speaks. Is clear, sir? But here this penalty does not arise because of the amendment taken place in the Finance Act 2020. Finance Act 2020 very clearly says that issuance of certificate of TDS by deductor to deductee is now no longer warranted. Therefore, if non-issuance of such certificate, penalty also does not arise. Is clear, my dear sir? Any difficulty? If you not pay the TDS in time, department will issue the notice on 73-74 to recover from you with the interest. Interest is mandatory, no? Interest is mandatory, which is 18% per annum. TDS you not paid in time, delay happen, you have to pay interest. Of course, penalty also, since you have been delayed to file the GST 7 return. Got the clarity, my dear sir? Any difficulty in the given case? With this I can say that TDS explanation by way of a quick revision is concluded. Is clear, sir? Thank you, my dear friends.